Yes, here we go. Oh my God. Fantastic. Welcome today, ladies and gentlemen. This is another episode, and thank you for joining us. This is Tiho and the Arcane Bear. I want to congratulate you for those that did and made it through the spring. It's one of the hardest things to do is have faith and confidence in your own homework, research, study, and conclusions. You never want to be held to the fire while following someone else's advice. It's much easier to do your own research and make your own valuable conclusions, because that way if something goes wrong or right, you only have yourself to blame. So thank you for joining us. We're going to start off today's episode, as we do with all episodes, taking a look at Bitcoin, Ethereum, and Link, our three main industry movers. And because of that, I want to go right ahead and remind all of you guys to give us a thumbs up, like and subscribe to this video and our channel. And remember that each day we do this, our live streams are going to be going over the important information first, and then the community segment, comments and questions for those of you that are in the live stream. We'll get to engage with you guys coming up here shortly. So boom, you can now see Bitcoin on the 4-hour. And as you can see, I had this spring written in. Now, I got a few funny comments last night because Bitcoin dropped with a wick below our trading range, which is actually a fairly common idea. The wick is basically in the spring designed to shake up those retail hands who don't know what they're doing and like to say things like, oh, I guess this video didn't age well. You know what? It aged perfectly. That was the exact type of movement in the spring we were looking for. Now, could we make arguments against and for the downside? Always can, but that's not what we're seeing. Again, a reason and a way to kind of see and check this mentality is to look at the depth of the volume and indicators. First and foremost, though, let's do what we always do by drawing our horizontal and vertical trading ranges. So here we can see the important part here, guys, is to do your homework and to spend the time taking that out, because it's worth a lot of money if you do it right. So we had our primary support come through. This was back here at around the $33,000 area. We had our first primary buying climax in the trading range come through. So we're just going to go spend the time. It's always worth doing, right? We always get to learn more. We had our primary shakeout. We're going to signify with an SO. We had our first secondary tests come up along the way before the spring. And yesterday, the spring was characterized by that dip below. Now, I had gone over this in yesterday's video, and the important part here to recognize is the volume. Now, the spring and the volume have this really unique relationship together. Are we done the spring? Could we see another temporary low? Yes, I think so. But if you hold on, we're going to go over a few reasons why I don't think that's the case yet and why we're still early on in this bull market. So the spring on the 4-hour, you can see, was signified by these two important parts. And this is called the law of effort versus result. So what we're going to do right now is we're going to circle the buy supply and we're going to measure the downside price spread. Okay, well, you can see that there was not a whole lot of down movement for the amount of volume that came in. Whereas now look at the amount of buy pushing the volume almost all the way back up. So right now we can see that there is less effort to go up than there is to go down. That means all that absorption that was taking place yesterday was on the buy side. So all the retail hands were selling, oh my God, Bitcoin's going to crash. It's going down to $20,000. It's the end of the bull market. Oh my God, it's the... Calm down. Do your homework, do your research, and study these trading ranges, because the bias is still bullish. We've been in a bull market since March 11th, highlighted by the infamous spring, or the idea of buy when the streets are bloody, even if it's your own. And that's what last night was. And that's what I ended up doing last night, was actually buying more Ethereum, because I'm a big fan of Ethereum. Hopefully you guys will see some more articles come out on that later. But let's zoom in and look at this with a closer eye. Again, you could see this effort versus result characteristic that we went over. Look at how much supply came in and the result. So here's the effort and the result. And again, look at how much supply tried to come in and the result, a thinner price spread. Okay, so good. More supply came in, less price result. This is one of the clear mantras in the spring specifically, and the backup and SOS phases, which we are going to want to keep an eye on. And I believe we're going to see much higher price tags for both Bitcoin and Ethereum because of these springs that we're seeing now. Again, if we zoom out on the 1 hour, you can see that we are still below the point of control in this trading range, both on the 1 and the 4 hour. And if just for fun, I open up some of our more, I guess, kind of arduous momentum indicators, but they do help. You can see that we hit one of our primary areas of resist or support, signified by this green line. If I remove it, here you go. There's our support range that was built up around the $33,000 mark, and we bounced right off of that. Again, these wicks to sell lower, this is really trying to shake out those last week retail hands like, oh my God, I bought it 40 grand, it's down to 30, what should I do? I'm just gonna sell right now, I'll figure it out later. It's always the wrong mentality. We keep reminding everyone, flex those investor muscles by executing monthly buys, not a dollar cost average, but a through time average. And let's show you the perfect example of this. So, Michael Saylor from MicroStrategies leading the way for all of you that do not know how to do this. MicroStrategy purchased approximately 314 Bitcoins, or around $10 million in cash, in accordance with its Treasury Reserve policy at an average price of approximately $31,808 per Bitcoin. So you know what they didn't do? They didn't wait for the bottom. They just said, hey, guess what? Today's the 22nd. I like the 11th. They're multiples of each other. Doesn't really matter. But they executed the perfect through time strategy, which is, hey, it's that time of the month. Let's buy some more Bitcoin. For me, I bought more Ethereum last night. Probably should have picked up a bit more Bitcoin too, but hey, I'm playing fast and loose right now. These are huge players, and the importance of recognizing what's going on here is that this is how you should play as well. I mentioned this in other videos that you want to walk like the guru, even if you don't have billions or tens of millions of dollars to buy. They continued to accumulate because it was the right time to do so. We were near the bottom of the trading range, as you can see, and anywhere in this area, this entire spread here, basically between 28,000 and 33,000, is a good entry because it's below the point of control, right? And it's near the main part of the trading range. So we're still early on in this. Thanks to Michael Saylor, I actually am really appreciating him in the market because, look, I don't have hundreds of millions of dollars to spend on Bitcoin, right? They do. And because of that, they leave the footprints of the whales right out in the open and they make it obvious what they're doing. They're still accumulating. And that's a really important factor to remember. Okay, one of the other things I wanted to go over today as well was Dan Moorhead. Let's see, where is this? My LinkedIn. Did I open this? Oh, I didn't get all the way to opening it. Yeah, there it is. So this was a nice one. This is the halving stock to flow prediction model by Pantera. So I guess, again, guys, remember Pantera Capital manages hundreds of millions of dollars. We went over BlackRock entering the space, who managed $7.3 trillion, an absolute astronomical price. Like 7.3 trillion is beyond your comprehension, is beyond my comprehension in terms of like assets under management. But again, here, this has gone out to their monthly newsletter since April of 2020. And again, that's pretty much when the bull market started. March 11th is the specific date exactly. If you'd like to do your homework, you'll know why. And I do suggest you do so by going to study Richard Wyckoff. All the information out there on the internet is for free. All you have to do is take the time and do it. Or you can join our private group by joining the links to arcanebear.com/private down below. There's no risk in doing so because if you're not happy, we'll just give you $45 back because we don't. It's fine. We have very few people that are happy. I think out of the hundreds of people that have signed up, we've given maybe like 7 refunds. And that's probably just because they were in hard times. It just had nothing to do with us. Anyways, as you can see, Pantera, people who manage hundreds of millions of dollars, have us over $100,000 by August and July. Now, that could very well happen. And I'm looking forward to those August $100,000 parties because we'll be maybe hosting a get together in Costa Rica, but that's a different story. So what's the importance of looking at information like this and like MicroStrategies posted? It reminds you not to be a weak little and do what you're supposed to do and execute like a gangster on your spot campaigns, especially when you're near the bottom of a trading range. I did not get shaken out last night. And for all of those people who posted comments saying, oh, this video didn't age well because we went $1,000 lower. Well, this is what good technical analysis looks like. And it's not about pennants or head and shoulders. It's about a horizontal trading range and doing homework and knowing what works. Anyways, I won't be too flabbergasted by this. Right now, we are witnessing the spring. So we will quickly go over this as well. These are accumulation schematics, although I do believe we're actually witnessing this particular reaccumulation schematic. This spring still could have another plick down, as you can see, phase C, blang, 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 around the trading range. And I do suspect that's probably the case. What you're likely going to see is a little bit of a, maybe even a lower one here, but you'll probably see some backing up action around the trading range and more volume come in before we start to see our first sign of strength, our LPS, our serious SOS, and our backup phases. And these are all very, very important to understand, because if you look at the rough time frame, for those of you who have been with us long enough, you would know that I had speculated that the real exciting parts in the bull market, like when we go from 40 to 100 grand, is going to be somewhere near March. That's going to start in March, the literal springtime, right? The vernal equinox, I believe, is what they call it in the more traditional esoteric studies, if you are interested in those types of things. The vernal equinox represents the springtime, the literal springtime, not just the metaphysical or the metaphorical that we speak of in the psychological aspects of the trading range, but the actual springtime. And I believe that will bring us into close to March. We'll probably see more sideways action in the meantime with Bitcoin. So again, keep a calm, cool mind. You've got tons of time to sit down and read the books, to do the homework. And if you don't, you should probably do something to fix that. Okay. Next thing. Okay, I have a very dirty Ethereum chart here. I'm going to clean that up as we go in. But the spring went a little lower than I had anticipated, but all my trades are back in the green. I had started building with leverage around 12:30. I start at small leverage. Don't ever copy or do what I do. Don't even trade leverage if you're new to this ecosystem. You're just going to lose money. First off, you should never look to other people on what you should be doing. You should be well educated enough to make your own financial decisions. And that's exactly what this channel is for you to learn to make your own decisions based off your own education. Otherwise, if F person trades on F person's idea and then F person is not there because they're on vacation on a yacht somewhere during that process, what the hell is little baby fishy going to do when they don't get that sell signal or the buy signal? Because the market changes daily. We could still see invalidations in everything we're watching. So this is a very quickly moving market. You don't want to miss that, right? So I'll clean this chart up here a little bit, and we'll go back to just looking at our basic chart here, our horizontal trading range and our Hige and Ashi charts. Again, we dropped down below the POC. I actually thought we'd see a little bit more support here, but lo and behold, the spring, again, one of the most important parts, wicked down. And look at that length of that wick, the amount of volume that came in. And the other important part here on the 1 hour is going to be signified by this price and result. Look at the amount of volume that came in. Look at the limited price spread. Very important. Effort versus result is a very, very important mantra to understand, especially in phases C, D, and E. In the first phase A and B, you almost should not even be caring about a trade because there's just way too much volatility and nobody knows what's going to happen yet. It's just not worth it. It's not even worth paying attention to until phase C is pretty much done. That's why I started entering my trade with a 3x leverage. And as we went lower, I actually increased the leverage with smaller amounts and increased my position, and am now sitting around a 16x position. A little bit high, but still in profit. So I'm feeling good. And we're above the point of control. Don't do what I do. That's absolutely ridiculous. Do your own thing. And again, that's the point of this channel, is to help you go through the educative process so you can make your own valuable decisions. I don't think I can repeat that enough. Should I repeat it again? No, I won't waste your time right now. So phase C, this spring, ultimately, as we hold above the POC, we want to see a break above this previous trading range. This, to me, is going to represent our backup phase. And I do believe that we're going to see something very similar to what we were looking at in the phase 3 schematics, which is this one here. So again, yesterday we talked about hunting an animal in the wild and the fact that a bear's footprint doesn't look identical to every bear's footprint. So you don't want to compare a polar bear to a grizzly bear and then find out it was a black bear, right? So this is the difficult part with reaccumulation schematics. Number one, they can look very similar to distribution schematics, which means it could be going down, right? And we've gone over that just briefly for those of you that are doing the homework. This is what a distribution schematic looks like. See, and how it in phase D here, it could have freaked us out. And it didn't make it back of the middle of the trading range. Well, look, we did. We made it not only back above the middle of the trading range, but back above the point of control. So again, we still could see this turn into a distribution schematic. There's no reason to not argue that that could happen, right? The only offsetting ideas that we have at this moment is look at the effort versus result. Look at the amount of supply that came in the market to create this downside, a massive amount of supply, to create this downside. And look how very little effort we needed on the buy side to get back above the POC. This to me is a bullish indicator. And even though I would like to wait until we see further closes above in phase D, which will be like the ultimate, this is the bullish trading range, we still could be leaning towards something distributive. So be careful. Know how to play with stop losses, do all your due diligence, your homework, and know what you're willing to risk for the potential that's a trade there. If it's a spot buy and you're new and you entered at the very top, just be patient and execute monthly. It's probably the safest way to go. Now, I want to do a little bit of a, we'll go over Link. That will be one of the final part of today's live stream early aspect, just because I think it's important to go over the market leaders. And the next thing I want to do is actually ask for some of your guys' help. We need someone who wants to do thumbnails, who's good at it, who can make like the most clickbaity thumbnails in human history, because that seems to increase the views. And as much as we don't really want people who aren't ready and willing to do the study, we do need to capture those newbies who are making the mistakes, because those are the people ultimately we want to save from making the mistakes. And if we have to have super clickbaity thumbnails with like melty face emojis and price targets that just look ridiculous, we will do that because the quality of the content once you get here is fucking high. And that's the most important part. So we're going to try out to be like a little bit clickbaity because we want to make sure that we help as many people as possible during this bull market not getting retailed. You like my personal bleep out? I don't even need a button. I'll just bleep myself out. Anyways, okay, we're looking at Link, and then we're going to dive in and go over the community thoughts and questions. Look at that. Beautiful rebound up the bottom of the trading range. I do suspect that we are witnessing a reaccumulation range for Link as well, right out of the backup phase. And we kind of went over this yesterday, but I will go over it again because I think it is importante, amigos. Es muy importante porque conozco a dónde que pasa en el mercado. Es muy, muy importante. El dinero es importante para ti. Okay, so part of this, what we went over yesterday was this horizontal trading range and the point of control. I do believe that we have, we'll just roughly draw it. I'm not going to spend too much time. Here is phase A. We went into phase B with our secondary test. Here is phase C, notified by the spring and the stopping action volume right there. We saw our first sign of strength, our primary backup, and our second sign of strength and our primary backup. Now what I believe we're witnessing is this new horizontal trading range in Link. And as you can see, we saw a kind of a spring come in at the same time that the rest of the spring action took place in the other markets. And this is important because it's a bull market, don't you know? So here we go. We can see this large amount of supply sell come in and then instantaneous turnaround on less volume. And that's very important to remember these effort versus supply results and to be able to do your homework and study, because it's like, guys, this is really like building an archway. A lot of you, it's your first time in the markets. There's an enormous amount of information for you to catch up on, especially when we do things like open the crypto vac and we're like, oh my God, the Bollinger Bands and the moving averages. And like, you're going to get confused. You're going to get lost because there's 1,000 million things for you to learn. So don't. Keep it simple. Focus on the horizontal trading ranges. Once you can understand the horizontal trading range, phase A through E, which is as difficult as going do, re, mi, fa, sol, la, si, do, if you can't repeat that in your sleep, forwards and backwards, you need to keep studying. Okay, so what does that mean for Link? I do believe we're about to see a breakout on Link as well, and probably the rest of the markets. Again, notice here our primary support, our first buying climax, our shakeout, our secondary automatic rally, our secondary test, our spring, which signifies, again, phase C, and then our move into phase D here. Now, phase D might break above the box, come back below one more time, come up above, and then form a new trading range. Again, what we're doing here is looking for the potential of a reaccumulation schematic, something like this, and also being warned that reaccumulation schematics look very similar to distribution schematics, so just be warned. This is one of the hardest things to do, is tell the difference between a reaccumulation and an accumulation schematic. So if you're new, what I suggest you do is you go back and you retroactively study the other markets. So for here, accumulation 3 is head and shoulders, and this is what we looked at with band the other day as well. Okay, awesome. I hope you guys got all of that. I believe it's extremely useful. There's so much value in this group. I'm really grateful for how many people come together and help one another in our private mastermind. And shout out to Baloo for joining us as a writer. We're gonna be maybe I can do it right now. No, I can't right now because I don't have the links in there. Tomorrow's video, we'll give a shout out to Baloo, and anyone that signs up under Baloo's links tomorrow on our video will get like a 10% discount on their membership if they use the code Baloo. But don't do that today because it's not set up and it won't work yet. So don't do it today, but tomorrow we'll do that because I love Baloo, and the goal is to work together to build something on a collaborative basis because there's so much going on here that we really need to work together. Anyways, it's besides the point. Well, it's not besides the point, actually. It is one of the main points, just not the point of the educational aspect right now. Okay, so here's a chart, right? You're thinking, dang, that's a sweet chart, right? Wrong. No, it actually is a pretty sweet chart. The link chart is looking fantastic right now. So for those of you that made it to this part of the episode, remember we are going to condense all of the important information into hopefully the first 16 minutes of each live video. And then at the end of this, for those of you that are still here, this is going to be the live community aspect. So stick around because we do go over valuable things. We might go over Ren or Band or Aave or Chainlink, or well, we already did Chainlink, or Avalanche, etc. So there is more valuable information at the end of this, but it does involve community conversations, so it might be a little bit more loose around the edges as comparison with the first 15 minutes of the video. And because of so many of you asked, I will finish today off by playing music again, and I will permanently incorporate that into the show because I love you guys and I want to. You keep asking for me to play music, and I think that's a brilliant idea. Okay, so back to where are we going to go here? Let's just, we'll leave the Bitcoin chart open right now. And then we'll take some questions. So back on to today's questions and answer of today's episode. So let's go. Next thing on the list here. Let's see, we'll scroll back. YouTube thumbnails are out of control. Yeah, we definitely need to... we need to get stupid clickbaity thumbnails because that's apparently how you get the tens of thousands of views. And we want to make sure that the people that are clicking on those highly emotional thumbnails are also the people that are learning, or at least the ones that are willing to learn during that time. So I know it kind of sucks, but at least the content here is super high value, right? Like you can't beat that. Okay, so ideas here. Nick W says, I posted a video of somebody who lost $200 million in Bitcoin. Pretty crazy story. Oh yeah, that was a long time ago, and they lost the money a long time ago when it wasn't worth 200 million. It's now worth 200 million. So it's kind of boring. It's not a great story. But it's super hype clickbaity stuff. So cheers to them on writing clickbaity articles. Again, we just went over that. ADA seems to have posted a nice spring as well. Okay, we can go over ADA. Hey, we have Charles Hoskinson coming on the show. The date is not booked yet, so stay tuned. We'll probably be doing like a 2-hour live stream conversation with Charles because I've got some great questions I want to go over with him, so keep your eyes on that one. Could you take a look at Avalanche? Yes, we will do that. We went over it in the private group today, again, thanks to Baloo. Shout out to our main boy and the rest of the Bear family and Kodiak administrators who help keep the conversation running so smoothly. Can you show us how we find resistances at the long-term, short-term hodl? Okay, homework, guys. You seriously got to do your homework. I've given you countless free resource ideas here. Just type in Richard Wyckoff. You can fill like an entire 3 months of free shit that you can find on the internet. God damn it, I swore. YouTube, you make it so difficult. Oh well. Tio, could you look at Aave? Okay, Aave, Avalanche, Cardano. I'm gonna write those down because my silly short brain bear is gonna forget. And you guys want me to look at a bunch of stuff here. So, and I try to do it as like rapid fire as possible. Okay, not that box. This is the one we want to go over. Okay, so 88. We're only gonna get a few in today though, guys. So swell up those super chats because those are the ones that will get highlighted first. And the super chats go to Kiva still, so don't worry. 88, Aave, what was the other ones you guys were asking for? We already went over links, so go back if you want to look at that. What were the other ones you were looking at? You wanted me to look at? Favorite YouTuber so far? Thank you, Anthony. I appreciate that. CME futures open up on February 8th. Will it disrupt the market? No, it'll most likely make it go higher at this point because we're not at the peak yet, but we will be. Also, best books for investing for trading other than Wyckoff. Read the book Reminiscence of a Stock Operator and then read all 5 books by Nassim Taleb. That's like those are my favorites. Hey Bear, maybe you can take a few minutes to share a bit about your first months and years investing, what lessons and mistakes you had. My first time I bought it, well, I didn't actually see. The first time I bought Bitcoin, I bought it $90 because I was getting a discount on my servers. So that's kind of irrelevant because I wasn't trading. I was just buying Bitcoin. I got lucky, basically. The second time I bought Bitcoin, I bought it $1,000, which at that time was the all-time high, and I had to watch it come collapsing back down, and that is what started my relentless study. Luckily, by the time 2017 had come around, I had become significantly better at technical analysis, and I started screaming from the rooftops at my friends here in Costa Rica to buy Bitcoin. None of them listened. Well, two did. One of them was a writer for the Men's Journal and Rolling Stone magazine. So that was fun. But that's also when I started the YouTube channel, because I figured, you know what, if the people don't want to listen to me, I'm going to find people that are actually interested in this information. And lo and behold, the birth of the Arcane Bear, which brings us basically to today. That's the short story. The volume spread on Ethereum and Bitcoin look more similar to another ST as spring as possible. Springtime. I believe that was a spring, not a secondary test. Yeah, join the private group here. Let's say membership and then go to that one too. Oh, I can only do one at a time. Vet. Okay, we'll add Vet. What was the other one? Avalanche. Some of our favorites. I don't like Vet. It's too high up, but we'll look at it anyways. I think Avalanche is better, but I'm a little biased because my tech team tells me stuff and then I just believe them because they're smarter than I am. At least in terms of tech. I'm really good at following the money and the market flow, which is something I've been studying because I bought Bitcoin at $1,000, watched it crash down to $200, and I was like, I better get my shit together. Luckily, I didn't sell any because I knew how valuable Bitcoin was, but that's a different story, longer story. Okay, get me some jungle sometime beach shots and the quirky self-portraits to create some FOMO thumbnails. Dan Head, can you please email info@arcanebear.com with your contact so we can send you stuff, and we'll go that direction. I think maybe we'll start putting beautiful women's booties beside me charting because we do have a few of those, and we'll just like, oh my god, look at the charts, and then everyone will look at the booty, they won't know what's happening, and then they'll realize there's a chart on the screen. I have no idea. We're going to do whatever's possible to get the CTR for these things to blow through the roof because I personally believe we have some of the most valuable like technical analysis content on the market. I'm not going to tell you who, but I've been watching other people's streams and they're like, oh yeah, if you're using Bybit and you use leverage at 10%, that's 100% gain. What they failed to tell you is that if you go down 10%, that's all of your money gone. They only tell you about the upside. They don't tell you anything about the downside. And that's a very like horrible way to get people into leverage because you shouldn't be trading leverage unless you're skilled and have years on deck, or go play with like $20 because you're going to lose it the first time and count that as your lesson for $20 basically. But yeah, we're gonna use that. We're gonna try to use these thumbnails to jack it up. Awesome. If you guys can give us the thumbs up for this content right now, we're going to be going over ADA, Aave, Vet, and Avalanche. That's a lot of A tokens. Something about those A tokens, ladies and gentlemen. Okay. BTC share. I hope I've been sharing my screen with you this whole time. Okay, that's true. That is true. Okay, so we're going to open a new one up. We're going to go on TradingView here, and we're going to start. Oh, okay. Black-handed is getting theta in there on the super chat. It's not enough for a Kiva one though. Backhanded. I'm a little disappointed. No, I'm kidding. Joking. Only joking. Okay, there's theta as well. Okay, that's it for today, guys. That's all we can go over. I want to go down and make sure I catch the sweet, sexy sunsets that we get here in Costa Rica. They're like mind-blowing. Okay, I'm also going to open my drink because this is the last part of the live stream, and I get to be a little bit more patient here with everyone, and there's no need to rush. Okay, hope you appreciate that. That's pure raw behavior right there. That's the sign of a real bear. Okay, what do we want to start with? Let's start with Avalanche because personally it's one of my favorite in terms of tech. Shout out to Baloo. Again, we're going to start doing a weekly Bear Forge. We'll probably invite him on the show so we can hunt together. It's always good to have two analysts kind of back and forth ideas, and that's how we go over the private stuff that we build as well. This to me looks like a flag. Now what's interesting, and we haven't really gone over these, and these are more for reaccumulation schematics, and I don't want to like inundate you guys with information, but what you will often see, especially in the midst of a bull market, is what's known as a bull flag. Now, these bull flags are actually horizontal trading ranges as well, and you would draw them something like this, right? So you'd have two. You'd have your falling reaccumulation, your spring right here. Let's actually go in on the hour. It'll be a bit more noticeable. Yeah, okay, here we go. So it'd be something like this. It'd be your buying climax. I'm going to draw it in. Your primary support, your buying climax, your secondary test, your automatic rally, your secondary test, a test, and then this becomes your spring. Now, we could argue between here being your spring and here. Avalanche is in very limited supply, and I can tell you that there were huge people that bought into this like from the get-go because it is some of the best technology out there to date. That's what I'm told. So again, remember, it's not my forte to study technology. Thank you to our tech team. I know he loves watching these videos. He doesn't like to be called out by name because, you know, anonymity. He likes anonymity. Me, on the other hand, I'm the crazy person who puts my face all over the internet. So we could make an argument again over, was this a spring or was this a spring? But right now, what it looks like, we are moving into the primary SOS and backup phases of Avalanche. Now, on the daily, the downside is we are already up 13 times, basically, from the major accumulation range, which we saw between basically August with our primary spring being way back here and then our backup phase and SOS being here. So when you're up this high, it's much riskier. So this is where you'd want to make sure you have a stop loss in place because who knows, anything can happen. But on the 45-minute, it does appear to me that we are witnessing what's known as a bull flag in traditional pattern recognition. And again, I don't suggest anyone study that crap. It's pretty much a waste of time. It can give you so many false signals, like how many people were charting a pennant, saw the pennant break down and then come right back up. Like, how useless is that? It's so useless. So don't do general pattern trading unless you are good at horizontal trading. So I suggest studying Wyckoff stuff first. Here you can see, again, we're probably into our primary SOS and I'm probably about to see another breakout. This is there's huge potential in Avalanche, guys. 4,500 transactions per second, virtual machines, very similar to Ethereum, cross interoperability between multiple blockchains already. These guys have it fucking nailed, okay? So keep that in mind. Okay, that's my thoughts on Avalanche. I know it was really quick, but we'll go through these things very quickly. Aave, look at Aave, an absolute screamer. Oh, and Aave kind of represents something that we would like to go over here too, is these horizontal trading ranges. Let's jump over here. Sorry guys, I'm gonna open up something that I didn't have ready because we weren't prepared to look at Aave primarily, but let's look at our newsletters and reaccumulation. Reaccumulation with Spring, open our private PDF here. So where is this? So these are the private PDFs that we sent to the group. Okay, so we kind of went over this yesterday, and this actually should be called schematic 3, not schematic 2, just so everyone's got like uniform content around the globe. The spring breaks below the box. Now, this spring can actually break below the box quite significantly before jumping across the creek. And for those of you that remembered when Supernova Leanne was jumping in and through the Omisego trade, we saw a huge break below the channel of the box before. So see how the springs can go significantly below. It comes back above the creek here. Ultimately, I think Aave is about to break out again. Beautiful horizontal trading range, big noticeable spring of the volume signatures are all the same. And again, you're rising on declining buy volume. That's fucking important. God, YouTube's going to hate me for swearing. I apologize, YouTube. Don't ban me. Again, guys, other YouTubers get this severely wrong. You are not looking for a rising buy volume. You're looking for a decreasing volume signature on the buy side in a bull market with rising price, because that is the law of effort versus result. Anyone that tells you otherwise is just a sham. Maybe I won't be that mean. They just don't know what they're talking about. That sounds softer. They're not a sham. They just don't know what they're doing, and they're selling other ideas that people have repeated and echoed for a long time that are totally not relevant at all. So if you see declining buy volume, rising price, this is literally the definition of effort versus result that we have gone over so many times. And I suggest you study that because it is an important part. Aave looks to me like it just had its final spring, very similar to what we go over in our private group on the spring here on reaccumulation. Should be schematic 3. I got to rechange that in our private information. But again, you can find this stuff basically for free on the internet too. And sorry, let's make sure we're looking at, yeah, that's why I want to keep it uniform with the rest of the internet. Oh no, it was reaccumulation schematic 1. What do I have it as? 2. Jesus, can't get it right, Tio. Oh well, we'll figure it out. I was ordering them in the wrong direction. I would like to keep it open with what's on the internet for free as well, so that no one gets confused about the information that we're all learning about. Even if you guys want to do study for free, don't join the private group. Again, you can find all this information for free anyways. The private group is really the most valuable part, is effectively the fact that you have hundreds of other people that are studying, learning, and helping one another. It is the most amazing group I've ever been a part of. We have game nights and all this stuff. Join the private members group. That's what I got to say. Okay, 478 people online. Before we go on to Theta and VET and ADA, give us those thumbs up. Please subscribe to the channel, because we are only like 45 people away from breaking 30,000. And that's amazing. That's like a personal milestone I'll be really excited about. So remember to subscribe and hit that notification bell. It really, really helps out. Can you please repeat the titles of the books? Yes. Reminiscence of a Stock Operator. It is like the most often recommended book. Anyone who knows anything about trading knows this book. If they don't, if they've never heard of this book, they suck at studying or they're not good at trading. I don't know, one of the two. Okay, Reminiscence of a Stock Operator by Edwin Lefebvre. You can find it on Audible. You can find it on Amazon. Try for $0 a month if you've never signed up for Amazon. I suggest reading it, but you can also listen to it. Let's listen. Let's take a listen. Sample.
The word classic has unfortunately been overused. To my mind, a true classic is a book that, because of its unique content or expository style, remains widely read and is appreciated generations and sometimes even centuries after its publication. In this sense, Reminiscences of a Stock Operator is a true classic. First published in 1923, it remains one of the most highly regarded financial books ever written, and seems all but certain to enter the 21st century as a volume still in print. Moreover, if I had to bet on which financial books will still be around at the end of the 21st century, Reminiscences would be at the top of my list.
Okay, that's all we'll leave. I think he pretty much summated exactly what I just said, but with a much like cooler kind of radio voice than I have. Anyways, Reminiscence of a Stock Operator is the #1 book for anyone who is in the financial sector for over 100 years. That's some serious shelf life on a book. Anyone who doesn't know it, I don't know what to say. Go do your homework. Okay, on to the next thing. Avalanche, no. Theta, ADA, and VET. Okay, let's look at Theta. Theta, from what I remember last time, had already broken out of its box a long time ago. So we had some of our private members, shout out to Glasswalker, who was making his entries in this horizontal trading range. Oh, that's a sexy trading range. And look, here's phase C, highlighted by this nice spike in sale volume and very limited price spread. It feels good to know what you're doing, doesn't it, ladies and gentlemen? And look at the breakout that came after that horizontal trading range. Explosive price. Now, we are pretty high up here in Theta. Let's take a look at the 1 hour. Okay, so I'd be a little bit hesitant here, just because we don't look. Here's the difference. Very little sale volume or supply coming in. Big price spread. Very little volume, big price spread. And none of the ones you'd want to see where you see like a big spike. Like you want to see at least equivalent volume to the primary shakeout. So these actually might be considered signs of weakness. Although again, it's too early in the trading range to tell. You want to wait for confirmations above or below the trading range. Ultimately speaking, I would not enter this trade yet if I were looking to find a position here. I would wait for a confirmation either below or above. That's as simple as that. Okay, that was pretty easy. Next thing, ADA, Cardano, Charles Hoskinson, again, we are going to be having on the show in the very short near future. So thank you to Charles for being such an awesome person and agreeing to speak with someone as crazy as myself about technology that I don't really understand but want to learn more about. I really appreciate when people are brave enough to do that in this ecosystem, because a lot of them aren't, especially when weirdos like me ask crazy questions like, well, do you think we live in a simulation? Or like, do you know what arborist? I don't even know what it means. I don't even know how to say it, for sakes. Okay, we'll just move on to ADA's price point then, because that is something I do know about. Now, again, I've made some pretty interesting conjecture. Oh, Actually, yeah. See, Cardano right now looks like it might be making a schematic 3 with the break above the box. It almost looks identical to Ethereum here. Again, where you see the primary spring in phase C doesn't actually come below the box. It just comes into the center channel here. And look at the amount of volume that came in and the supply test. This is so important, guys. Really, like after you've got a hold of the trading ranges, effectively, this area here is going to be so important for you. Understanding the volume. Primarily, you want to start with the horizontal trading ranges because it's super important to do so. The more you understand the horizontal trading ranges, the better you'll be able to signify, are we in phase C based off the volume indicators? Because you could get ahead of yourself and think that this was the volume off the primary shakeout because you have no idea that this is actually the start of basically phase B and not phase C. So you want to know primarily, okay, here's your primary support, your first automatic buying climax, or your automatic rally, your shakeout, your secondary test, a sign of strength, your spring into the middle of the box, and then a break back above the trading range. Now, again, we went over the much larger trading range that took place in ADA primarily with your spring, your sign of strength, your backup phase, and then again, this nice horizontal trading range. This is like the sweet spot. This is really the sexy place to enter with little risk and like the most upside because you're talking about like a 27% spread is huge. I would never be able to take a leverage position there, but it just less time on deck to get the results that you want. Whereas if you entered in March, you'd have to have waited many months on your trade to, so although mind you, again, if you had entered in March with $1,000 at the very bottom of the spring, pretty much at the top, you're talking about a 16x gain. So $1,000 would have turned into $16,000. Mind you, if you'd done the same thing with Band, it would be worth $85,000. So again, never neglect the venture capital potential. Just put very small amounts of money on there and walk away because you don't know. You don't know. And if you claim to know like the Link Marines or any of these people, it's like you're just playing with fire because you've joined a cult instead of becoming a better investor. Anyways, don't join cults, become a better investor. I think we quoted that one yesterday. Okay, finally, VET. VET was way too volatile for me. We went over we almost went over this in the private group. Although, look, you can see a similarity here between VET and Link on the 4-hour. Sorry, VET and Ethereum on the 4-hour. Although, again, the volatility here is huge. 40% on the spring. Like you can't play with leverage here. It's made so less sexy. I would rather a thinner spread with like a defined trading range and more leverage than this volatility and just being able to enter its spot. But that's me personally because I'm a crazy man. Nonetheless, you can see the similarities between here and Ethereum. Same with Theta potentially as well, which is the break above the box, a spring into phase C, back into the trading range before a move up as well. So really interesting to keep an eye on these. I personally wouldn't be trading with leverage here, but if you were looking to find like a spot position in VET, it does look bullish to me. Again, the volume characteristics. What we want, again, just to go over this, is to be similar to that of the primary shakeout, which you have here. So this does likely represent phase C. Again, guys, so much of this stuff takes time. Don't expect to learn it overnight. If you think you're going to learn it overnight, you're absolutely insane. Don't be insane. Become a better investor. Just do your homework. It's going to take months, years. It could take you years to catch up with what I can do in 30 minutes. The same way it would take you years to catch up with what I can do in 5 minutes on a guitar or a flute because I've been playing music my whole life. I can just swear now. I already broke the thing from this. David Park, we're just going to remove you from our chat altogether, I believe, because you don't belong here. Hey, one of our admins, can you just get rid of David Park? Thank you. If you ask a question and then shout an answer and then swear all within 30 seconds, you're no longer allowed to comment on our channel. We'll just remove that from you. It's not your right to swear on our channel. It's my right to swear on my channel because I'm the one that loses revenue from AdSense if I do it. Okay, so last thing. Everyone's asking about Ethereum. I believe that this is the spring. I would like to see, again, a close above this primary position, but my leverages are all in the positive. I don't think that it's going to go down like more, but again, what you could see is something like this, like a horizontal trading range. I'm still ultimately very bullish, especially since we went over how many big guys are playing this game like gangsters, while all of you little fish get worried about small price movements. Don't be a small fish. Play like the big boys and the gurus. Otherwise, what's the point of even showing up? Yeah. Anyways, thank you guys all for joining us on today's episode. This is Tio with the Arcane Bear. I really hope you enjoyed that. Everything is looking good, at least from the schematics that we've gone over. Join our private group. Again, no risk to do so because we will give you a refund. It's $45 a month or $370 for the year. You get an immense amount of value for that. I'm sure, well, I know so because I've gotten so many private messages of our members showing me success results. And that's because they're doing their own homework, their own study, and they're coming to their own conclusions. I didn't invest in Theta during that primary trading range, but some of our members did because they had built their own formulation of what they were looking for, what was of interest to them. And when they found a trading range that looked super sexy, like this primary trading range that we saw back in Theta over here, they took their positions based off the information that they had gathered. And that's really what we want. We want a group of people who are well-informed and making their own decisions, not a bunch of people that are trying to follow me and what I do. Because ultimately that will never work. That's only a failure to try to follow someone else. If you ever think you're going to join a signals group and make money, you'll pay for the privilege to prove that easy money is just never found. So do your own research. This is Tio with the Arcane Bear. Thank you guys all for joining us on this episode. We will be back again live tomorrow. If you want to join any of the places to trade, Binance, FTX, those are all down below. BlockFi. That's it. That's all I got to say. Thank you guys all for joining us. I really appreciate it. I can't express how much I love doing this. And to watch the private group grow, and not just like more people, but how each of you interact and help one another by answering each other's questions. So if person A just learned something that person B is asking a question about, then person B now gets to respond to person A gets to respond to person B and articulate what they just learned, increasing their own educational aspect. And that to me is absolutely phenomenal. I love seeing that. It is so much stronger we're so much stronger when we work together. Yes. Okay. Flute. Thank you for reminding me. I would have forgot. I have to remember this. We'll end off today with a little bit of flute. I think last time we played major, so maybe we'll play something a little minorish today. Again, guys, this will just end off the episodes with a little bit of Tio music, and actually we'll go back to face. I don't know. Which one of these looks better, do you think? I can't tell. Does it even matter? This one looks good. Am I in focus? Hey, camera, focus on me. Close enough. Hey, camera. Thank you guys all for joining us. This is Tio with the Arcane Bear. You make what we do so valuable. I will continue to produce more vlogs and hopefully music videos for all of you. So keep that in mind. It's just my main goal is to do one live stream a day. And then as we build, hopefully we can hire Noah full time and have him maybe even come down and stay in the foreign countries with us so we can produce this stuff. I absolutely love you guys. It's wonderful. So we'll see you again on the next episode. This is Tio with the Arcane Bear. We're signing off for the rest of the day, and